As the renminbi takes further steps towards becoming a global currency, the issue of how fund managers, multinationals and investment banks use it is increasingly coming to the fore. We're going to be discussing what comes next in the world of renminbi funding and investing, but first, the FT's Tom Griggs has been speaking to one international company that is already borrowing and spending the Chinese currency, CLP Group.
30 years ago, Hong Kong power company CLP was one of the key customers and investors in a deal between the UK's Margaret Thatcher and China's Deng Xiaoping to finance his country's first nuclear power station at Daya Bay. Today, the company has $15 billion worth of investments in mainland China, ranging from legacy coal and nuclear plants like Daya Bay to the latest technology renewable wind and solar installations.
These projects are financed with local banks. The bond market was initially not very deep, as you know, the dim sum market, and has short-term maturity. So it was not cost competitive. And we basically get PBOC or sometimes even sub-PBOC rates with the banks.
But as China's capital markets mature, the way CLP wants to fund new projects there is changing. The company wants to group all its assets together in a single portfolio and issue a large corporate bond to pay for them. The question is whether to raise money on the offshore dim sum bond market in Hong Kong or the onshore Panda bond market in China.
We think that the funding advantage of looking at the onshore bond market compared to the dim sum one, if and when the cost of the onshore market would come down, will be that we will get longer term maturity. To a certain extent, you can see the offshore one as a temporary oddity in time or in history. Once the onshore market rolls, I have this view that the portfolio managers that I meet when we are on the roadshows for our equity, they will need to increasingly expose themselves through RMB and RMB economy.
If a Hong Kong-listed multinational like CLP thinks the future lies elsewhere, does that mean that Hong Kong's dim sum market has gone cold for good?
I'm joined now by Sean Chang, who manages renminbi money for Baring Asset Management, and Oliver Brinkman, who helps companies to borrow in renminbi at Deutsche Bank. Oliver, let's start with you. We've heard some complaints there about the dim sum bond market. Are these common problems that issuers face, and are there any solutions on the horizon?
Well, I think, from a dim sum perspective, that market has taken off dramatically, frankly. It's still the #1 offshore market. If you want to borrow offshore RMB, frankly, there's no alternative to dim sum today. The Panda market is still a very nascent market. So just that liquidity, the ability to use different currencies and markets and potentially bring the money onshore through a foreign debt quota gives you a lot more flexibility in Hong Kong versus doing it in the onshore market.
Sean, aside from the issuer perspective, from the investor perspective, does the dim sum bond market come with its own frustrations?
Well, I think in the early days, people focusing on dim sum bond or Panda bonds is on the currency. If there are currency appreciation opportunities, people don't care about the coupons, don't care about the tenor. All they care is just get the exposures of the renminbi. But now markets are getting more sophisticated. The frustrations, I would say, would be on the tenors, whether issuers can extend to longer tenors, 10 years or maybe even longer. And other frustrations could be on the dim sum bond, whether the dim sum bonds have enough varieties from different sectors, different industrials. I think in the early days only about high yield, but now I think investment grade issuers' appetite is also growing.
I mean, lots of investors talk about the opportunities of the onshore market where yields are typically higher and you've got a far bigger universe of companies to invest in. I mean, do you see that as the future of renminbi bond investing?
Well, the onshore market is pretty much depends on how the policymakers deregulate the system and whether the offshore investors can able to tap into the market. Initially, it was just issued by the Chinese government issuers, and later on, the SOEs are also commonly issued in the onshore market. But I think foreseeable futures, other corporates, local or even foreign issuers can able to have this opportunity.
Oliver, when you talk to issuers, at the moment multinationals are sticking to the dim sum market largely. Do you think that they'll start looking at onshore bond issuance, like these Panda bonds that we've seen a couple of already?
Yeah, we've seen really one issuer, which is Daimler AG from Germany, going to the Panda market. Other than that, nobody's ventured into it. I think over time, I agree with Sean. I think what the Chinese government has to do is basically create the legal framework, create the liquidity. The investor base at the end of the day will determine whether these issuers can come to the market. So yes, it will happen, it will converge, but I think there's some time to go.
I mean, so final question then for both of you. In 5 years' time, will we still be talking about the dim sum market? Sean?
Obviously, if there is a conversion trend, there will be only one market, the RMB market. Dim sum bond, I think it will still exist, but only applies to those bonds still outstanding.
And Oliver?
I don't think you have the panda eating the dim sum. You probably have both next to each other, and they're probably growing into one big nice market together.
Delicious.
Yes.
Yeah. Oliver, Sean, thank you both very much for joining us.
Thanks very much.
And you can read plenty more on the renminbi at ft.com/reports.